This week, I think the important thing is, last week we had US CPI data. We had economic news that wasn't that positive. Fed FOMC minutes this week. Also concerns in the Middle East, Russia and Ukraine, certainly supporting gold. Gold's reaching that record high again. Equity prices are pretty much just off their record highs again. So that is a bit of a concern. But first of all, let's have a little bit of a deeper dive into what's happening in the US. I mean, last week's CPI data presented a bit of a mixed bag. The core year-on-year rate showed the 12th consecutive fall, so that's quite encouraging. But the month-on-month data actually showed there was an uptick. Now, that is a bit of a concern because that tells us that, monthly, it's a shorter data set. It basically tells us that things could churn. And I think this is a worry that the Fed has, because if it does turn, it's a bit of an issue. And I think this is why the Fed is basically holding back on looking at any rate cuts. However, the market is saying, well, look, we can expect up to 100 points between here and Christmas. I don't think that's the case. I actually think the Fed, if they do anything, might be November, but they will be guided by what's happening on the state of the economy. Also last week, we had some pretty bearish numbers, and to me, that was a bit of a concern. And all those numbers were missed expectations by quite a large. Industrial production month on month came in negative 0.6. The expectation was negative 0.2. Capacity utilization, that in itself came in at 77.8 versus expected 78.6. That's showing the economy is not doing that well. And of course, manufacturing output minus 0.3% versus an expected up of 0.1. All those numbers saying that the economy is reacting to a high cost of money, and as a result of that, expenditure is not as much. So they're seeing a contraction. Now, the interesting thing is, will the US then tip into a bit of a recession as a result of this, or will the Fed actually turn around and say, well, okay, we will move on interest rates? The market thinks that they will actually move on interest rates sooner rather than later, and that's why we're seeing equity markets sort of starting to trade much, much higher. A huge bounce, I guess the lows we saw as a result of the concerns in Japan. But needless to say, we've had a big bounce. As to whether or not it's sustainable, I don't think it is. And I think this is just cementing a range that we're in. I don't see why we should go to record highs, particularly when we've got uncertainty around the US election. Although we are seeing that the Democrats are sort of taking out some states, and that to me is a bit of a concern. Okay, so interesting also, when we look at Japan, a few cracks starting to appear. Nikkei's had a bit of a fall. That might sort of trade over into the US equity markets. Let's see what happens. But I guess also the uncertainty that we're seeing in the Middle East and also Ukraine, Russia. Now, that's sort of basically a bit of a spin actually happening there. And as a result of that, I think you might see just a little bit more volatility and also some safe haven buying. And that's what we are seeing with gold trading at record highs. $2,500 an ounce. It's certainly up quite a bit, couple of $100s from last week. Let's see what happens there. Also, let's see what happens to the value of the US dollar. This week's going to be pretty quiet in terms of economic numbers. I guess the most important thing is the Fed FOMC minutes. They'll be due out on Thursday. And more importantly, we've got the Jackson Hole Symposium. And I think to my mind, that's quite interesting. What's going to actually come out of that? Fed Powell on Saturday will actually deliver a bit of a speech. I think so it's worthwhile being pretty close to what's happening there, mainly for following Monday. The title for this series is for this symposium is Reassessing the Effectiveness and Transmission of Monetary Policy. Could be quite interesting. All central bankers get into there, have a bit of a chat, and see where it's going to take them. But I think the Fed's pretty resolute in its decisions. Until inflation really does start to have a bit of a move, they're not going to change. But mind you, the core rate's been pretty good and it's been consistently coming down. So that might sort of see them do something sooner rather than later. Please subscribe to our YouTube channel and click like to inspire you to take trading actions.